The collapse of two large regional banks has sent shockwaves through the U.S. economy. As the Biden administration takes steps to stabilize the banking industry, some fear the failures could trigger another financial crisis. Paul Murphy's here to tell us if the New Orleans area bank customers should be concerned. So, Paul, should they?
Well, Katie, not yet is the answer I got from one local bank president. Meanwhile, Congressman Steve Scalise is calling for a thorough investigation into the bank failures. The sudden collapse of Silicon Bank in California and Signature Bank in New York, with more than $300 billion in assets, is stirring fears of a larger upheaval in the U.S. banking industry.
The most important thing is that it's not a systemic-wide problem, but there's panic that can come from this. You don't want to see runs on banks who are right now solvent because you had a few banks that weren't doing things the right way.
Both SVB and Signature invested heavy in tech startups and cryptocurrencies. Jefferson Financial Credit Union President Mark Rosa does not expect New Orleans area banks to feel much impact, if any, from the bank failures.
We're not venture capital lenders, and we're not cryptocurrency lenders, and I don't know anybody in the city that is.
Rosa cautions against customers rushing to take money out of their bank accounts.
If their checks will clear, their financial transactions will go right through, their debit cards and credit cards will work.
The federal government will now guarantee deposits for SVB account holders to head off a financial crisis like we saw in 2008. The recession and bank failures that followed were caused by excessive mortgage lending to unqualified borrowers. Congressman Steve Scalise said he's concerned about reports that the top leadership at the bank took out money and gave bonuses right before the federal takeover on Friday.
When you have a big collapse of a bank, you need to have investigations, and most importantly, you need to have accountability. If people did things wrong, they need to be held accountable because ultimately it affects everybody in every bank.
Mark Rosa told us rapid increases in borrowing costs over the past year may be partly to blame for the current fragility in banking. Given the bank collapses, he expects the Fed to leave interest rates where they are, at least for now.